Ladies and gentlemen, I want you to forget everything the mainstream financial media has told you about wealth and investing, because right now there's an opportunity in silver that most investors are blind to. An opportunity that, if you act wisely, could literally make you a multimillionaire. And it's not about speculation. It's about strategy. It's about understanding the cracks in the financial system and positioning yourself to profit when the inevitable collapse occurs. Let's face reality. Your dollars are not what they used to be. Every year, the government prints more money, adds more debt, and promises that everything will be fine. And yet the truth is staring us in the face. Our currency is losing purchasing power at an alarming rate. Prices are rising, but your paycheck isn't keeping up. Retirement accounts are growing in numbers, yes, but the real value of that money is shrinking. This is why people who fail to protect themselves are going to wake up one day and realize that their wealth has been quietly eroded by inflation. But there is a solution, and it has existed for thousands of years. That solution is silver. Silver is not just another commodity you trade on an exchange. It's a tangible asset, a form of money that has held its value across centuries. While governments and central banks manipulate fiat currencies, printing more and more paper promises, silver remains unaffected by their whims. Its value is intrinsic. People understand it. History respects it. When currencies collapse, when inflation spirals out of control, it is the silver holders who come out on top. Those who understand this are not just protecting their wealth. They are ensuring that they preserve real purchasing power that paper assets simply cannot guarantee. The problem is that most investors are trapped in a system that glorifies numbers on a screen rather than real assets in hand. They believe that stocks, bonds, or mutual funds are enough to secure their future, but what they don't see or refuse to see is that all of these assets are ultimately dependent on the currency that underpins them. If the dollar falls, if inflation continues unchecked, all those numbers are illusions. They may look like wealth on paper, but in reality, they are depreciating by the day. Silver, on the other hand, is wealth you can touch. It cannot be devalued by a central bank decree. It cannot be printed out of thin air. It is a hedge against everything the financial system does wrong. And let's talk about the psychology of the market. When inflation spikes and people realize that the value of their money is disappearing, they naturally turn to tangible assets, gold and silver. Historically, during times of financial crisis, silver has not just preserved wealth. It has multiplied it. Those who positioned themselves ahead of the curve were able to profit tremendously. While those who ignored the warnings watched their savings evaporate, the lesson here is simple: silver is not speculation. It is protection. It is a hedge against the policies that governments and central banks pursue with reckless abandon. What makes silver particularly compelling, especially in today's economic environment, is its accessibility and its dual role as both an industrial metal and a monetary asset. While gold often dominates headlines as a store of wealth, silver offers unique advantages. It has industrial demand that supports its base value. But unlike paper investments, it cannot be created out of nothing. Its scarcity is real. And as the global financial system becomes increasingly unstable, investors are realizing that holding silver is not just prudent, it is essential. It is insurance against the risk that all fiat currencies will eventually lose credibility. Consider the broader picture. Central banks around the world are aggressively lowering interest rates and engaging in quantitative easing as if more money solves the problems of too much debt. But every dollar printed, every bond purchased, and every promise of stimulus further undermines confidence in fiat money. Those who fail to recognize this will wake up one day to find that their so-called wealth has been hollowed out. Silver, by contrast, stands as a bulwark against this erosion. It is an asset that cannot be manipulated in the same way an asset whose real value is recognized globally, independent of political agendas or economic experiments. Now, I want to make one thing crystal clear. This is not about chasing the next hot investment or following market hype. This is about preserving wealth, about hedging against a system that is fundamentally broken. Silver is a tool to do exactly that. It is the difference between losing purchasing power every year and maintaining, even growing your wealth in real terms. And for those who act decisively, it is not just protection, it is opportunity. The people who recognize silver's role in an inflationary environment, who accumulate physical assets before the masses, are positioning themselves for financial security, and in many cases, substantial gains when the rest of the system catches up to reality. At the end of the day, it comes down to one principle. Real money is not paper. Real wealth is tangible. And in a world where currencies are continuously diluted, where governments promise prosperity while undermining the very money they issue, silver emerges as a safe haven. It is a hedge against inflation, a shield against uncertainty, and a store of value that has proven itself over centuries. For anyone serious about protecting and growing their wealth, ignoring silver is not just a missed opportunity. It is a risk no prudent investor should take. The time to act is now. The system is fragile and the erosion of wealth is already happening. Those who understand the power of silver, those who recognize its intrinsic value, will not only survive but thrive. This is the essence of wealth preservation in the modern world. And it is why silver is not just a commodity. It is the ultimate hedge against the inflationary spiral that threatens the purchasing power of everyone who trusts in paper money. Timing is everything when it comes to investing. And nowhere is this more critical than in markets tied to precious metals like silver. Too often, investors are misled by hype, chasing the next surge, without understanding that markets do not move in straight lines. They rise and fall in cycles driven by economic realities that most people ignore. Those who fail to recognize these cycles are destined to miss opportunities or worse, lose significant wealth. But those who understand market timing and have a clear exit strategy can transform what appears to be a small investment into life-changing gains. The first thing to understand is that markets are not random. They are influenced by supply and demand, by central bank policies, by fiscal mismanagement, and by the psychology of millions of investors reacting to the news. When a bubble forms, prices can soar far beyond the intrinsic value of an asset, fueled by speculation and irrational optimism. This is why so many people buy at the top and panic at the bottom. They follow the crowd, not the fundamentals, and they pay the price. The key is to see beyond the immediate fluctuations and understand the bigger economic picture. Timing isn't about predicting the exact day or hour. It's about recognizing the trends and positioning yourself to act decisively when the moment arrives. For silver investors, this principle is especially important. Silver is not just a commodity, it is a monetary hedge, a store of value, and an industrial metal all in one. Its price is influenced not only by industrial demand, but also by investor sentiment and macroeconomic conditions. There will be moments when the price of silver spikes, moments when it dips, and moments when it stagnates. The disciplined investor does not panic or get greedy. They observe, they calculate, and they make moves based on strategy, not emotion. Understanding when to enter the market is just as important as understanding when to exit. The exit strategy is often what separates successful investors from those who merely watch from the sidelines. Accumulating silver or any other asset without a clear plan for selling is a mistake. Too many people buy silver thinking that it will always go up, ignoring the fact that markets are cyclical. The greatest profits are made not just in buying at the right time, but in selling at the right. You must be willing to take gains when the market rewards you, even if it means foregoing the hope of higher returns. Waiting too long can turn a multimillionaire opportunity into a missed chance. Market timing is not about gambling. It is about discipline. It requires monitoring economic indicators, understanding monetary policy, and watching for signals that the system is under stress. When the government continues to print money, when debt levels rise unsustainably, and when confidence in the currency wavers, these are the moments when precious metals tend to surge. But the savvy investor knows that these surges do not last forever, bubbles inflate and then burst. An exit strategy ensures that you lock in profits before the crowd turns fearful and prices collapse. Another critical aspect of timing is understanding the global economic context. Silver does not exist in isolation. It is affected by currency valuations, inflation expectations, interest rate trends, and geopolitical developments. A sudden spike in inflation, for example, can ignite demand for silver as a safe haven. A shift in interest rates can affect the attractiveness of holding physical metals versus paper assets. Political instability can send investors scrambling to tangible assets. Recognizing these triggers allows the disciplined investor to act before the majority, securing gains while others are still hesitating. Discipline also requires emotional control. The temptation to hold on to silver indefinitely, imagining that prices will continue to rise forever, is one of the biggest mistakes investors make. Similarly, panic selling in a short-term downturn can lock in losses unnecessarily. A sound exit strategy is built on patience and foresight, not impulsive reactions. It is about setting clear goals, understanding the risk-reward ratio, and being prepared to act decisively when those goals are met. Multimillionaire gains come not from luck, but from calculated moves executed with precision. Finally, timing and exit strategy are about preserving wealth as much as creating it. Markets can be volatile, and silver prices can swing dramatically in short periods. Without a plan, even a well-timed purchase can turn into a loss. But with a disciplined approach, you can ride the waves of market cycles, taking advantage of peaks and avoiding TR. This is not speculation. It is strategy. It is the difference between sitting on paper profits that vanish with the next economic shift and actually realizing the wealth that your insight and foresight have earned you. In conclusion, investing in silver or any asset for that matter without understanding timing and without a clear exit strategy is a gamble. But with awareness of market cycles, discipline to follow a plan, and the courage to act when the moment is right, investors can turn even modest positions into substantial wealth. The market will not wait, and the opportunities will not last forever. Those who prepare, who study, who watch, and who act decisively are the ones who emerge not just financially secure, but genuinely wealthy. Timing is everything, and an exit strategy is the key to unlocking the full potential of any investment. We live in a world where the money in your wallet is steadily losing value, and most people don't even realize it. They assume that because the government prints dollars, euros, or yen, and because banks say these notes are legal tender, the money is safe. But the reality is far more sinister. The very system that creates this currency is designed in a way that guarantees devaluation over time. Every new dollar printed, every artificially low interest rate, every central bank intervention chips away at the purchasing power of your hard-earned savings. And if you don't understand this, you are essentially giving your wealth away slowly but surely. The monetary system today is built on debt. Governments spend far more than they take in and rely on borrowing to cover the gap. That debt is financed through the creation of money. When a central bank buys government bonds or injects liquidity into the financial system, it is not creating wealth. It is diluting the currency. Think about it. If you owned a valuable asset and someone made 10% more of that asset overnight, your original share would be worth less. That's exactly what happens with fiat currency. Inflation is a silent tax on everyone who holds money instead of real assets. People often focus on the headline inflation numbers and think they're manageable. But the truth is that official statistics are manipulated to downplay the real cost of living increases. The reality experienced at the grocery store, at the gas pump, and in healthcare costs tells a very different story. The purchasing power of your money is shrinking faster than you realize. That's why holding cash, savings accounts, or even bonds in today's environment is not a safe strategy. You are guaranteed to lose wealth in real terms over time. This is where precious metals, especially silver, come into play. Unlike fiat currency, silver cannot be created on a whim. It is a tangible asset with intrinsic value recognized worldwide. When the currency around it devalues the value of silver rises. It is one of the few tools that can protect wealth against the steady erosion caused by an uncontrolled monetary system. Investors who understand this are not speculating. They are defending themselves against a system that is stacked against anyone relying solely on paper money. The dangers of currency devaluation are not theoretical, they are already happening. Every major economy today is engaging in some form of monetary expansion. From quantitative easing to negative interest rates, governments are piling on debt at record rates, often using low-interest environments as an excuse to borrow more. While this may temporarily stimulate economic activity, it undermines the long-term stability of the currency. History teaches us that when governments take this path, hyperinflation or severe currency depreciation is often the eventual outcome. Those who are unprepared will be the ones left scrambling. Currency devaluation is not just a threat to individuals, it is a systemic risk. It affects global trade, savings, investments, and pension. People may have diversified across stocks, bonds, and real estate, but if all of these are measured in a devaluing currency, their actual purchasing power diminishes regardless of what the numbers on paper say. This is the harsh reality that many fail to grasp until it is too late. The monetary system is not neutral. It inherently favors those who are closer to the creation of money, like governments and large financial institutions, and penalizes ordinary savers. Investors who recognize this pattern understand that the solution is not to fight the system, but to position themselves outside of it. Holding tangible assets such as silver and gold is not about speculation. It is about survival. These assets have stood the test precisely because they retain real value independent of the currency around them. When the dollar falls, when other currencies falter, precious metals rise to fill the gap, preserving wealth that would otherwise be eroded by inflation and devaluation. Moreover, currency devaluation has ripple effects that are often underestimated. Interest rates may rise suddenly, asset bubbles may burst, and social unrest can follow economic instability. These are not distant possibilities. They are logical consequences of a system built on money creation and debt expansion. Investors who ignore these risks are essentially gambling with their future. By contrast, those who understand the mechanics of devaluation and act accordingly are taking control of their financial destiny. They are protecting themselves from the erosion of their wealth and positioning to benefit when the system inevitably fails. It is also critical to recognize that currency devaluation is not uniform across the globe. While some countries may experience relative stability for a period, the interconnectedness of global markets means that weaknesses in one currency affect others. Diversifying into tangible assets such as silver provides a hedge not just against the local currency, but against global monetary instability. It is a strategy that transcends borders, economic policies, and short-term market fluctuations. Ultimately, the lesson is clear. Relying on fiat currency to preserve wealth is a losing proposition. The monetary system is structured to devalue money over time, whether through direct inflation, interest rate manipulation, or excessive debt creation. Those who understand this, who position themselves with tangible assets out to the control of central banks, are the ones who can maintain real wealth. Silver is not a gamble. It is insurance against the inevitable erosion of purchasing power. It is protection in a world where the monetary system cannot be trusted. And in this environment, preparation is everything. The longer one waits to act, the greater the erosion of wealth. Those who act decisively today will be the ones who emerge financially secure when the value of currency finally catches up with the realities of reckless monetary policy. Too many investors today believe that they are diversified simply because they own a mix of stocks, bonds, and mutual funds. but that is a dangerous illusion. True diversification is not about having exposure to different paper assets that are all dependent on the same fragile monetary system. When the dollar loses value, when central banks expand the money supply, all of those so-called diversified investments lose purchasing power simultaneously. Diversification in its true sense means holding assets that are not correlated with the failures of the fiat system. It means protecting yourself from systemic risk. And there is no better way to do that than through physical silver ownership. Silver is not just another commodity, it is a tangible store of wealth. Unlike digital investments or financial instruments tied to the banking system, physical silver cannot be erased, frozen, or devalued by policy decisions overnight. When governments print more money, inflate the currency, or manipulate interest rates, paper wealth suffers. But the real value of physical silver endures. It is a hedge against the reckless actions of central banks, a form of insurance that can preserve purchasing power when all else fails. Holding physical silver is not speculation. It is a defensive strategy that has been proven over centuries. The importance of owning physical silver becomes even more apparent during times of economic stress. Paper assets rely on intermediaries and infrastructure that can fail, banks can collapse, trading platforms can freeze, and financial institutions can be nationalized or restricted by government mandates. If your wealth exists only in these forms, you are vulnerable to events beyond your control. Physical silver, however, is yours. It is tangible, portable, and universally recognized as a store of value. In times of crisis, it is one of the few assets that can be relied upon to maintain purchasing power. And for those who understand this, it is the ultimate form of financial security. Diversification also requires thinking beyond just silver. While precious metals are critical, they should be part of a broader strategy that includes a range of tangible assets. Real estate, collectibles, and other non-paper assets can complement silver holdings and provide additional layers of protection. The key principle is that these assets must not be dependent on the performance of the dollar or the banking system. True wealth preservation comes from owning things of real intrinsic value. Assets that exist independently of government policy and cannot be devalued by the stroke of a pen. Moreover, physical silver ownership allows for flexibility and control. Unlike ETFs, futures, or other paper-based products, physical silver gives you direct access to your wealth. You can store it, transport it, or even use it in transactions if necessary. This kind of control is invaluable, especially in an unpredictable economic environment. When markets move against paper assets, when banks impose restrictions, or when digital accounts are compromised, those holding tangible silver are able to act independently. They are not at the mercy of financial institutions, and they are not relying on a promise that may never be honored. Another critical aspect of physical silver ownership is liquidity. While some argue that selling physical metals is cumbersome, in reality, silver is widely recognized and can be converted to cash anywhere in the world. Its universality is unmatched, and during times of economic stress, demand for physical silver often spikes, making it highly liquid when it matters most. Those who understand this can leverage their holdings, strategically taking profits or reallocating resources at the optimal moment. Physical ownership gives you options that paper-based investments simply cannot provide. Diversification and physical ownership also force discipline. Unlike digital assets that can be manipulated by brokers or exchanges, tangible metals require storage, security, and careful management. This physical reality encourages long-term thinking and prevents the impulsive decisions that often destroy wealth. Investors who commit to physical silver are more likely to maintain a measured strategic approach, avoiding the emotional swings of the market and focusing on real sustainable wealth preservation. The current economic environment makes this approach even more crucial. With central banks printing money, governments accumulating debt at unprecedented rates, and the value of paper currency steadily declining, relying solely on traditional financial instruments is a risky gamble. Physical silver provides a foundation of security that is impervious to the failures of monetary policy. It is diversification in its purest sense, a safeguard against inflation, devaluation, and systemic collapse. For those who fail to recognize this, the consequences can be catastrophic. For those who act decisively, the rewards are stability, control, and true financial independence. Ultimately, diversification is not just about spreading risk, it is about survival. Physical silver ownership is the cornerstone of the strategy. It allows investors to step outside the system to preserve real wealth and to gain a measure of independence that paper assets cannot provide. By combining silver with other tangible, non-correlated assets, investors create a portfolio that can withstand the failures of fiat currency, the mistakes of policymakers, and the volatility of financial markets. This is not theoretical. It is a proven strategy, one that has protected and multiplied wealth for centuries. In the end, the choice is clear. True diversification requires stepping beyond the illusions of paper wealth and embracing tangible assets. Physical silver is more than a hedge. It is freedom, it is control, it is security. In a world where financial institutions, governments, and currencies are failing those who trust them blindly. Those who understand this, who act decisively, and who make physical silver a cornerstone of their strategy are the ones who will emerge not only protected, but empowered, ready to face whatever the economy throws at them with confidence and resilience. So here's my message. Don't wait for the headlines to tell you it's too late. The next wave of wealth is coming from silver, and those who position themselves now, who understand the risks and act decisively, are the ones who will emerge as multimillionaires. History has shown us time and again precious metals protect and multiply real wealth. And in this era of reckless money printing, silver isn't just an investment, it's an exit strategy. Prepare now. Act wisely and watch as others scramble while you secure your fortune.